Hi, I'm Greg Hunter. Welcome to USAWatchdog.com. This has been a wild week on Wall Street with the markets, and this headline from USA Today pretty much sums it all up. You know, fear reigns on Wall Street, and the writer of the article, I give these guys a hard time, USA Today all the time, but he starts out in a very succinct, clear way, and it says, exit stage right, greed, enter stage left, fear, and nothing could be really right on the money. And I thought, who can I have on to explain what's going on? And I tell you, what came to mind immediately when I saw that 324 5-point drop on Wall Street was Gregory Mannarino, TradersChoice.net. Gregory Mannarino, thank you for joining us on short notice today to talk about what the heck is going on with Wall Street. Yesterday, a bit of a dead cat bounce, up 100 points, but still we lost 325 points or so on the Dow. What is going on? I know you understand what's going on. What's happening?
I'm trying my best here, Greg Hunter. That's a fact. Anyway, thanks for having me here. Well, there's a lot of stuff going on here, Greg, and I've been covering this, at length on my daily business day market report on YouTube. Let's just go over a few things here. First of all, we had an incredible run here last year. We all know this has been driven by Fed liquidity. This is no secret. You've discussed this with many of your guests in the past. We understand there's a dynamic that has been changing here in the market with regard to the Fed purchasing mortgage-backed securities and bonds. This has rattled the emerging markets. It's no secret. We're seeing problems with their currencies as well. What I don't think people understand, for the most part, unfortunately, is the Federal Reserve has created an environment of distortions, period. And by them pulling back some of this liquidity from the global economy, if you want to think of it in those terms, they've caused problems in these emerging markets. And I've been saying this. This is being done on purpose, Greg. Let's put a perspective on this here. So the Federal Reserve understands that they need to continue to drive investors into the U.S. equity markets, into the bond market. So by rattling the emerging markets here, they're going to force investors into U.S. equities, into the U.S. bond market. So if you want to think of it, it's still kind of like a backdoor stimulus or something by manipulating the overseas markets, the emerging markets, and forcing investors into the U.S. equity market, into the bond market. It keeps this whole party going. That's all this is here. And what we've seen recently is, matter of fact, 2 weeks ago, and anyone can check this on my site, I called literally with pinpoint accuracy. This is true. This pullback here in the market. Now, what I've been doing here, and I've been pretty open about it, is I've been buying these dips here, Greg. I went short the VIX recently as well, because I don't think this is going to continue. This big sell-off that we just had, multifactorial. Again, we got this emerging market problem. We have this issue with the U.S. economy. I mean, they've been force-feeding us nonsense, Greg. You know this, and all your subscribers know this as well, that we're in some kind of a recovery. Well, this ISM number that we got, we have not seen a pullback like this since 1980. It rattled the markets.
It really is showing. Explain with the ISM for people who aren't Wall Street wonks. It really is an indicator of a buildup in products and things that they're manufacturing, and there's no buildup. And if you don't build up, stuff you can sell in the future, then you don't think the future is very bright. Is that a good assertion of why this ISM number is so important?
Well, yeah. But yeah, think of it this way. They're still saying, oh, well, the number is still positive. That means that we're growing. Well, you know what? Maybe that's true. But we're still pulling back here. And again, this is profound. It's since 1980 we haven't had a pullback like this. What else is going on here? We're getting mediocre earnings reports. We've got unemployment numbers that are not good. So again, this is spooking the market here. But let's take in the grand scheme of things here. We still have a Federal Reserve that continues to distort these markets to the point of ridiculousness. And again, this goes back on what I've been saying lately, is we have these global markets that are being rattled on purpose here by the Fed to drive investors here. So again, the U.S. stock market and the U.S. bond market are the best looking ladies at the ball here. So I believe still that throughout all this turmoil, you're going to start to see inflows into these markets here because we're seeing huge outflows from the emerging markets. Where's the cash going to go? Is it just going to float around? Of course not. It's going to look for a place to go, Greg. And I'm still a bull here in the short run with regard to the U.S. equity markets. We all know where this is going. This is going to end terribly. At one point, a complete financial meltdown is happening. You can see this already with the way the Federal Reserve has again distorted this beyond the point of ridiculousness. Now is forcing the emerging market investors to look to the U.S. equity market. At one point, people are going to realize this whole thing is not sustainable, Greg, and we're going to have a crisis of currency, a crisis of debt that you and I have gone over at length many, many times. It's going to rock the core of the earth, period.
Oh, Janet Yellen. There's some talk that Janet Yellen may. I mean, we're already people are applauding the fact they've tapered, which $65 billion a month times 12 is $780 billion. I mean, it's a TARP fund every year at the rate we're going. It's still a huge amount of liquidity going in the market. 0% interest rates, phony accounting. Do you think if things we get another couple of earth-shattering things with the emerging markets, that Janet Yellen A may reverse course, or B could emerging market economies say, you know what, we need liquidity, we're cashing out our treasury bonds, we need some liquidity, give us our money? I mean, what could happen here?
Anything is possible. This is what I think is going to happen here. First of all, this so-called taper here. What the Fed is doing here, understand, by them pulling this, I think it's a total of $20 billion in liquidity out of their stimulus. All they're doing here is, again, it just goes back to what I was saying, forcing these emerging markets to get rattled here, and again, forcing these investors into the U.S. equity market, into the U.S. bond market to keep this going. So it's the same thing. Whether this is a taper or not, I still think remains to be seen. We know this. Ben Bernanke has been saying for how long now that they can increase or pull back at any moment. So this is all part of the same thing. I don't think they've laid out any clear plan. We've been hearing over and over again that this is dependent on this and dependent on that, and they're going to change this metric and change that metric. So whatever it is, it is. Will Janet Yellen reinstitute this or increase it? Maybe at one point. Will be interesting to see how the market reacts to that. I'll be honest with you.
Why?
Well, I mean, I think if the Fed would come back and say, let's say next month, the month after, say, you know what, we're not going to taper, we're not going to cut any more spending. The market's going to say, whoa, what does that actually mean? Does that mean things aren't as good as they're telling us that they are? I mean, it's all part of the illusion, Greg. You know this, I know this, everyone knows this. This is all about perception. It's nothing, not reality. If we were really in some type of a recovery, we'd be talking about extending unemployment benefits for people. Would we be talking about more stimulus, more this, more that? Of course not. There's no recovery. This is just all smoke and mirrors across the board. And that's why, again, I'm still bullish here. People say to me, Greg, how can you be bullish here in this market? Again, recently, I called this market top. No one can deny that. Just go to my channel, you'll see it. And I had been saying for a while now that we're at a market bottom, but then we got this ISM number, which just changed everything. But I made a couple of charts for you and your subscribers here. Maybe they'd be interested in seeing this.
Yes, we love your charts.
Yeah. A couple of things here are just important. Again, I make these paper charts here. This is a ticker DIA. This follows the ETF that follows the Dow Jones Industrial Average. Right now, we are at this little point right here, which I really, this is after that big sell-off.
Go down. There it is. The little dot right there. Okay.
Yeah, that's where that dot is. And you can see we're at major support here from two angles. Now, that combined with this is the VIX, VXX actually. This is the ticker that follows the volatility. You see that little dot here?
Yep.
All right. Same kind of a scenario. So it looks to me like we could see a reversal. But it's very important to watch the dynamic here in the market. If we do not see a follow-through over the next couple of days, we could experience, and I want everyone to watch this, sustained losses in this market that could rattle anyone trying to be involved in this here. But if we can hold these, I personally intend to add to my long positions here. Because again, we have a Fed that is extremely accommodative. The emerging markets, I don't know anyone who really wants to be involved in these things right now. I talk to traders and investors every single day. So what are people going to do? They're going to look towards the U.S. equity market. It's all about keeping this party going. It's all about keeping this illusion real. It's not about reality, Greg. We all know this.
Could we, just listen to your talk, could we reach a point at some point where the Fed is in a situation where they're damned if they do and they're damned if they don't? They're damned if they keep with the taper, and they're damned if they don't and reverse it. I mean, are we going to reach an inflection point where no matter what they do, we're going to get a sell-off, or is there something else that I'm missing?
You know, I would tend to believe at this point, at least, that, I mean, unless something very drastic happens here and the Fed has misinterpreted information or misinterpreted what they think is going to happen, that they're going to continue possibly cutting purchases of the mortgage-backed securities and yeah, because again, what they're counting on here, and this has to be understood, they're counting on the turmoil in the emerging markets to drive investors into U.S. equities, into the bond market to keep the system propped up.
But what kind of
That's
a plan,
what this is.
But what kind of a plan is? I mean, I believe you. First of all, I believe you're right. Paul Craig Roberts says the same thing there. Purposely, the former Assistant Treasury Secretary, PhD in economics, Paul Craig Roberts. He also says exactly what, not exactly, but basically they're causing this problem to make the dollar look better. They're causing this problem to make U.S. investments look better. But what kind of a plan is that for growth? Let's make them look really bad so we look good. Doesn't that eventually blow up?
Without a doubt, it's going to blow up. 100%. That won't go on forever. That absolutely will not go on forever. And depending on how other things play out as we move forward, Greg, there's no doubt about this. I still stand by this. I've been saying this for years now. We are headed towards a pan-global financial cataclysm. That's a fact. And people need to understand what they need to do. That's what I've been talking about forever now. The importance of getting away from paper assets, the importance of being involved in precious metals.
Yeah, I want to bring that up because a lot of people are saying, well, listen, he's telling me to go long the stock market, and yet he's saying get out of paper assets. But you do something very unique. You take your winnings and you basically make them solid. You turn them into a metal, or you pay off your house, or you buy a car, or what you're doing with your paper is you're turning it into a tangible asset of some sort.
That's exactly what I do. We've gone over this many times. I pull my gains out of the market and I turn them into hard assets. Again, I am still, and I will remain this way, the biggest precious metal bull probably out here. I can't imagine a better place to be at this point than in gold, than in silver. Silver more specifically, in my opinion. Platinum.
Physical metal, not an ETF.
Physical, yeah. Forget about the paper derivatives. I don't even want to touch the paper derivatives market, and I trade these markets. It's just beyond ridiculousness what they're trying to do here. But that can't be sustained either. I mean, people are going to look back on this time, Greg, and say, "My God, I wish I would have gotten involved at that time." This is the truth. There is not a better investment vehicle in the history of the world, in my professional opinion, than the precious metals, more specifically, again, physical silver. And I get that question every day from people. Greg, where should I put my money? What should I do? I say, do what you want, but this is what I'm doing. Pretty much.
Well, let me talk to you. One other thing that's coming up, and it was mentioned in this USA Today article, and it's a legitimate thing. A lot of people forgot about this, raising the debt ceiling. Like, we got a budget deal for a couple of years. We're going to raise the debt ceiling. I mean, I'm looking at, don't we need to raise that thing another couple of $1 trillion, at least $1 trillion a year? And is Congress, i.e. the Republican part of the House of Representatives, and probably some Democrats too, aren't they getting a little nervous about going up to, we're starting to approach $20 trillion? I mean, we're already, shot past 17.4 trillion or so. The Fed's balance sheet is bloated to 4 trillion. And, so if we get into trouble, I mean, how much more is the Fed going to do? But really, I want to back to the debt ceiling. What happens if that doesn't go smoothly? I mean, we're supposed to be out of money by the end of this month, by the end of February 28th. What is your call on the debt ceiling debate, debacle, whatever? Is that going to affect the markets? Is that going to cause the economy to go under?
I think they're going to raise it. Again, we are in the biggest bubble in the history of the world, and that is this debt bubble. It is, without a doubt, Greg, the greatest threat to humankind. I've gone over this at length. I've dedicated parts of my blog to this. My book, I go over this. Forget Al-Qaeda. Forget about anything else.
Yes, hold on. While you're there, hold on.
Yeah.
Let me just give you the selfish promotion, which you didn't tell me to do. This is your book that you put out. And yes, you do talk about how bad this bubble is going to be, even though they're prolonging it right now, even though you're talking about trading this market right now. That is the politics of money, which you came out with a couple of years ago, several years ago, that you're saying that no matter how it ends in a debt explosion. That's basically what you're saying.
Greg, the biggest, again, it's even hard to verbalize this, what is the ramifications of how this is going to play out. I mean, people don't think of it in these terms, but this is about resources. That's really what it is. When this debt bubble bursts, Greg, resources will become scarce. And it's going to cause, I hate to have to put it in this way, but it's a fact. If people aren't able to get resources and to sustain themselves, basic things, what do you think is going to happen? We're going to see millions, if not tens of millions of people lose their lives on a global scale. That's the severity of this. People don't understand it. They think it's a financial problem. Yes, it is a financial problem, but it's tied to this debt issue. It is insurmountable. There's no way out of it. They're going to hyperinflate this thing, i.e. raise the debt ceiling and keep borrowing cash from the futures to live it better now until this thing explodes. No one's going to address it. They're going to let it explode. And this goes towards the importance of owning hard assets, period. We're going to watch the paper fiat currency turn into confetti. And those who are holding hard assets are going to come out the winners here, Greg. And even some of those people, I think the pandemonium that is going to break out over this when this debt bubble bursts, it's beyond imagination, really, if you really put that into perspective and think about how that will play out. And there's no way out. It is going to happen.
And, you know, everybody's sitting here thinking, asking this question, Greg, ask him when. Ask him when. Ask Greg Mannarino when. So there's my question. When? Do you think it blows up this year? Gerald Celente says it'll melt down this year. He said on our USA Watchdog channel that would, by the second quarter, at the end of the second quarter, we're going to have a major currency crisis. What's your call about this? Jim Sinclair says by August of this year. He's also a very smart guy. These are not stupid people.
No.
And then you also, listen, you could be on CNBC if they would choose you to be on. You're as smart as any of those guys. Of course, you won't talk the company line. On one side, you're saying, oh, we're long in this market, buy stocks. On the other side, you're saying, whoo, sweep your money and put it in hard assets. Ooh, don't do that. Don't say that. I mean, but anyway, what's your call on when this big global blowout's going to happen?
You know, Greg, that I guess is the question of questions. Is it, you know, it'll, what we know is this, and it's very simple, to put this into another perspective. And I want everyone out there who's listening to this to just do a little research. It'll take you 5 minutes. Look at every single financial and economic bubble in history. Every single one, without exception, has burst at one point. Why? Here's the key, Greg. Because they rise above a level that can be sustained by any means. So, at this point, we have a Federal Reserve that's continuing to hyperinflate this debt problem. They're driving cash out of the emerging markets. This is what they want to happen, into the U.S. equity market, into the U.S. debt market, okay?
But stop just for a second. I want to interrupt you here. I mean, just the idea, and I believe you and other people back you up, but that's what you're down to? You're down to just driving money out of some other market into your market? There's no growth. There's no innovation. There's no...
There lies the problem. Yes, you're right. There lies the problem. And that's probably, I mean, right now, we can't be too far off from this, Greg. I mean, could it be next quarter? It could be tomorrow. It's all about confidence in the system. And that's where they're trying to keep the illusion real. It's not real. They're trying to keep this illusion real. Once people realize that this entire thing is built upon a house of cards, People are going to go running for the exits. There's going to be no stopping this. And that's where we're going to see that debt bubble burst. And we've been over this too, Greg. It's not just that one bubble. Every other bubble associated with that, and there are many of them, are going to blow up in succession. Boom, 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 just like that.
Housing,
no
currency, the bond bubbles, going to the stock market, housing, the dollar, everything blows.
Everything that's been propped up by this whole thing is going to end very badly.
And everything's suppressed?
Exactly. We're going to have an absolute reversal here. All of the people will be scrambling to get their hands on hard assets. There's going to be a mania because of this. And who knows where it can go? I mean, how can you give it a value on something when it's based against something that's not real? It's incredible how this is going to play out. And again, when? Who knows really when? But we do know it will happen. It will happen. It's a 100% guarantee.
Yeah, I'm going to throw the curveball at you. You know, we discuss in broad terms. I knew we were going to talk about the stock market, but I didn't discuss this with you. You know, now we find out over the last week was 2 bankers and then 3 bankers and now 4 bankers committed suicide. I mean, in a little more than a week. And I'm thinking, wow, we're in a recovery. I'm making tons of money. I think I'll throw myself off a building. I think I'll hang myself in my office. I think I'll blow my brains out. But what do you think is going on with all these, you know, fairly high-ranking bankers that have inside information of what's going on? What do you think that means? What do you think that is signaling, if anything?
You know, unfortunately, I did hear about these things. I haven't paid too much attention to it. You know, who knows here? I still think it's part of what's going to end up happening here on a grander scale, Greg. When people realize that this whole thing isn't real, that this recovery they've shoved down our throat is not real. Things are not going to get better. They're only going to get worse. And again, I think we're getting an inkling of this if you can put a perspective on what the Fed is trying to do by rattling the emerging markets to drive cash into the U.S. equity market, the bond market. And that market, we may be very close to an end here. And maybe people are just coming to that realization here. Because I have no doubt that in the streets, right outside people's houses, there's going to be rioting when this entire thing comes down, Greg. And people just need to be ready for it. And that's the message I've been giving for years now. You, many of your guests as well. People don't want to be caught here not prepared for what is coming. You need to do it. They need to do this. They need to do it now. They need to understand where this is going. They need to gain a perspective on this. They need to focus on it, period. Forget about, you know, the illusion. Let's focus on reality here, people. It's just so important.
Final thing, you think Yellen will do an about face if things start getting bad, like you say, that the illusion's going to start, you know, the chinks in the armor of the illusion, and you know the smoke's going to clear, and people are going to, oh my goodness, we really don't have any recovery, we really don't have any manufacturing buildup, we really don't have a good employment picture. You think Yellen would do an about face and put it back up to $75 billion a month or $85 billion a month or $100 billion a month or whatever? Do you think she's going to do an about face in the next few months? Handicap that for us. Sure.
I think that they're going to come up with things that we can't even dream of yet. Other ways to manipulate markets, other ways backdoor stimulus packages, whatever it might be, to keep this going until the bitter end. Will they put it in our faces and say, hey, you know what, we're going to reverse the taper or taper the taper, whatever it might be, because we're hearing a lot of that from the financial channels. I don't know if it's going to be that, but something else is going to happen. Once they complete this, their new thing again, which is rattling the emerging markets to drive cash into our markets and our bond markets and our debt market. Once that plays out, they're going to have to come up with something else. And that's how I think we know we're very close. And I think that maybe some of your other guests are onto things, Gerald Salente and among others, that we could be very close to this. We just got to keep watching. We just got to keep our eyes open and pay attention. And that's it.
You know, I think you're right about this, but you know, that they're just making the other markets look worse. And if that's all they got, yeah, we're getting close. If that's their plan. Whoa, are we getting close to an end?
We are.
Gregory Mannarino, traderschoice.net. Thank you so much for coming on. Really appreciate it. Gregory Mannarino, traderschoice.net. We'll be following you, my friend, and don't be surprised if I don't call you up in a couple of weeks and have you back on for an impromptu. Thank you so much for coming on.
Anytime, Greg. Thank you.